The US market has been described as on a rally for quite some time. I would not agree if it's meant to describe the overall US market, but would agree if it refers specifically to AI or tech stock. And here's why. Among the four major US indices, the Russell, which is also representing a much broader base of US listed companies, continued to struggle to break above its high from last year, even though the other indices have far surpassed their last year high. In fact, the Russell has corrected 9.5% since last month. And after that, the other indices also follow suit only in the past few days, breaking below this uptrend line that have started since April this year. My name is Con Hao. My work in this channel is to study behavior science and finance, discover correlation between different markets, and uncover potential opportunities. This analysis is based on technical studies and does not constitute financial advice. Please consult a licensed broker before investing. What I just did was an interrelated market analysis, where we study related US indices to form an opinion of what's coming for the US stocks. And the AI bubble has been widely discussed in the recent months. However, we observe that the Magnificent Seven, and they are also the key components of NASDAQ, Dow Jones, and S&P 500, continue to gain momentum until they began breaking below their main 2025 uptrend line. But Russell has taken the lead and has broken below this trend in late October. In last week's tutorial, we discussed the key support level for NASDAQ. Once the support is broken, we must stay nimble with our position. And it's just broken the past few days. And the earliest clue came from Russell Index, where we have to understand that it's not just the big companies, but big companies also have their suppliers. And many of their suppliers are part of Russell 2000. When the Russell or the smaller caps companies starts to weaken, it often reflects broader market pressure that may eventually spill over to the rest of the indices or vice versa. Let me recap the process of how I monitor the four indices and then narrow it down to the individual index. Many investors just focus on the big three index, but I constantly monitor all of them. And this gives me the opportunity to give myself a more well-rounded analysis. Why am I not convinced that the overall US market is on a rally from last year high? While the three big index has broken above their last year high, Russell is still struggling. And here's why. And let's look at Russell. And let me just switch over to the quarterly chart here. And that's what I'm seeing. And if you're just going to study the big three, you may not able to see this. You may miss it completely. But what I'm seeing here is that I'm just going to draw a line here that we could see that it was resisted on this 2021 high, and last year was resisted. That we could see that since last year high, that's what I meant here, last year high for not just NASDAQ, but for Dow Jones and S&P, they have all far surpassed last year high, but not for Russell. You can only see this on this analysis on the 3-month chart. In fact, if the quarter, which is the last year of 2025, and here, it would mean that Russell 2000 have this very strong resistance still here. It was tested in 2021. It was tested last year, and it's once again tested this year. Now, because of this analysis, the interrelated market analysis, it started with Russell. I became very cautious. This is how I draw an uptrend line. It have to make sense. It have to touch a few significant bottom, which is did. And so for the NASDAQ as well, it touches a few significant bottom. So is the Dow Jones, and so is the S&P. But it started with Russell. It met a high in October, just last month, But if I've broken below this very solid uptrend line since the Liberation Day started, and all the indices have formed this nice uptrend line. So at the end of last month, it have broken, and I became very vigilant on what's coming. And then there was an AI bubble was talked about, and that was fundamental. The valuation are high, but I have to confirm with the technical to give me that precision. And what I'm seeing here on this daily chart here is that it's only the last few days that we could see the Dow Jones, S&P, and Nasdaq start breaking below this 2025 very nice uptrend line, which is a very crucial uptrend line. So will this break subsequently extend into a longer term correction? As time passes, new fundamental and technical developments will emerge, and we should continue reassessing the situation regularly. We do not need to exit at the top. It is impossible to do that, but when both the technicals and fundamentals align, our exit level can often be just slightly below the peak. Feel free to leave any comments below. I'd love to exchange ideas with you on what is about to come. Really happy that you stay through this tutorial. You have many great trading weeks ahead.